Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with John Fein of Firebrand Ventures. John, thank you for joining us.
My pleasure, Hall. Thanks for having me.
Can you talk a little bit about your background before you got into investing in early stage? What did you do before this?
Absolutely. So I'm currently based in Kansas City. I've been here for over 12 years, but I'm originally from Boston, Massachusetts. I grew up in Boston in actually a town called Brookline, which is right next to Boston, and went to college in Central Mass. And then after college, I moved to San Diego, and I had the whole dot-com boom and bust experience in San Diego in the 90s and into the 2000s. I was a part of 5 different startups while I was out there, one of which I co-founded. So I have the whole founder experience of the whole enchilada of building a product, raising money, building a team, getting customers. And so I thought that was just a hugely valuable experience for me. So I'd worked for actually 5 startups back to back while I was in San Diego. And then my son was born and I needed a little bit of a break. And I got what I thought was going to be a quote unquote normal job for a while with a slightly larger company. At the time, they were called Prescription Solutions. And they were sort of at the forefront of the mail order pharmacy business. And I didn't know it when they hired me, but they ended up hiring me to spin up their operation in Kansas City. And so within a few weeks of being hired, they handed me a $100 million budget. And they said, we need you to go to Kansas City and build up this operation from zero to about $2 billion a year in revenue. And along the way, you're going to need to hire about 1,500 people. And so this normal job quickly became this all-consuming multi-year, multi-billion-dollar project. But it was great. It was hugely entrepreneurial. And I was very fortunate to learn how to scale a decent-sized operation after having worked for 5 startups just previous to that. And so I didn't need to, but I volunteered to relocate to Kansas City. So I relocated my family out here in 2006. And it was just because of a lot of positive things we saw going on in Kansas City at the time. And we love it here. And I actually ended up staying with that company after they were acquired by United Health Group. And then I went right from United to Techstars in 2013.
So from there, you went to Techstars, and tell me a little bit about your experience at Techstars. And then I guess that was your segue into the startup sector in Kansas City with Techstars. But tell us more about that.
Yeah, I had been engaged with the Kansas City startup community for about a year. And what happened, it was a funny thing. I had met someone in Kansas City who knew Brad Feld and David Cohen. And one day I just get an email from David Cohen in my inbox saying he wants to talk to me about something. And I was like, why is David Cohen emailing me? And obviously reached back out to him and we hit it off. And one thing led to another. I joined Techstars in late 2013 to spin up their new accelerator in Kansas City. And that was really my first foray into investing. I was incredibly fortunate, as I know you talked to Amos Schwartzbarb in Austin, who runs the Techstars accelerator there. And as I'm sure any managing director for Techstars will tell you, it's an incredible experience. You also get to learn from some of the best investors in the industry, like David and Brad. And so, I ran three programs for Techstars in Kansas City. I invested in 30 companies. And it was an amazing sort of foundation, I guess you could say, for actually being a VC. And in addition to, like the opportunity to engage and build relationships with other VCs, not just in the Midwest, but all over the country. So it was a fantastic opportunity and learning experience for me, and one that I'm still grateful for. And I went right from Techstars to launching Firebrand in the summer of 2016.
Great. So you see a lot of startups coming through, and there's a lot of people that want to invest in startups. From your experience, what's your advice for people that are just now starting to invest in startups? What would you tell them to think about first and foremost before they do that?
Yeah, what I've learned over the years is there's just no substitute for meeting with a ton of founders. I'll say just in general, meet with as many founders as you possibly can, learn about their backgrounds, their businesses, and also experience the types of questions that they ask you. It wasn't really for me until I had met with probably at least 1,000 startups where things sort of started to click for me as an investor. So that's the first thing I would say is there's no substitute for that, and there's no shortcut. You just have to get out there and meet with a ton of founders and track them and keep in touch with them, build relationships and see how they do. And then the other thing is being an investor to me is in a lot of ways no different than being a startup founder in that you need mentors. And I think having mentors who are deep experience and all different viewpoints is really, really important to just sort of honing your craft and learning on a daily basis.
That's good advice. Get out there and engage and find quality mentorship is a great way to get going. Now, you're in the Midwest, and we have interviewed VC firms in the Midwest, and it seems like it's a great untapped market. There's not a lot of capital running around, but there's quite a few startups coming up. But how do you see the Midwest market evolving at this point?
I think you hit on exactly the reason why I started Firebrand is because while I was at Techstars running the Kansas City program, we brought in, and by the way, I think it was somewhat a benefit for me that I'd lived on the East Coast and the West Coast before I came to the Midwest. So I was familiar with sort of the cultures of both coasts. And what I saw was we would bring in startups from all over the US and in some cases overseas to Kansas City. Many of them were very fundable early stage startups, yet they couldn't raise money in Kansas City or the Midwest simply because there just weren't enough sources of capital. And so I felt like there was just a big misalignment there between the quality of startups in the greater Midwest region and the capital available to them. And so that was I first saw it sort of in 2014, 2015, launched Firebrand in 2016. And I think even today, there are still huge opportunities for active, proactive VCs who really want to get out there around and be present in communities around the greater Midwest to find some outstanding startups. And I think we've been doing that.
So you're bringing capital to the area. How do you see other venture sources coming into it? Do you see it attracting a lot more capital, and where's it coming from?
Yeah, it's a great question. So I think it's coming from a couple of different areas. There's definitely way more capital in the Midwest today than there was 3 years ago. And that's from a couple of different sources. I would say some funds are opening offices in the Midwest that weren't in the Midwest before, which is always great to see. I think there's a lot of new funds. There's a lot of seed funds. In Kansas City alone, I think there are 5 or 6 funds, all sort of different with different approaches that have been raised in the last 2 years. And I think that's somewhat typical of other Midwestern communities as well. And then I think what you start to see as well, I've seen this in Kansas City and in other communities, family offices have gotten more involved. And they brought in some money off the sidelines to start making some more direct investments in startups. So it's all good for startups. We're huge fans of entrepreneurs, and we're happy to see anything that helps them. And so if that means more capital from different sources coming into the Midwest, it's fantastic.
Are you seeing more companies move to Kansas City because there's capital there, there's a growing community, or what's really driving it in your area?
I think what you're seeing is, I don't think they necessarily move to Kansas City or to the Midwest for the capital, but I think the capital is starting to hit sort of that minimum threshold where moving to the Midwest, let's say they're moving from San Francisco to Boulder, Austin, or Kansas City, I think the capital is at least at that minimum level where it's like, okay, there is capital there. There are funds there. And guess what else there is? There's a much higher quality of life, low cost of living, in some cases, amazing public schools like where we live here. And so I think it's pretty compelling story for founders to move here. And we're obviously seeing that. We're seeing some of that in Kansas City, certainly seeing quite a bit in Boulder and Austin, places like that as well.
So to talk about your fund in particular, what is your investment thesis for it, and how did you come to that thesis?
Yeah, so like I mentioned before, we felt like the greater Midwest, and by the way, greater Midwest is a completely made up term. It really doesn't mean anything without a definition. And so the way we define greater Midwest is from Austin to Minneapolis, and then over from Boulder to Columbus, Ohio. That's our primary territory. And we'll go outside that for compelling deals. But 16 of our 18 companies are located in that region. And that's the first thing we look for. Is this company in this region that we feel like is underserved? We're a seed stage fund. So we typically look for startups that are raising somewhere between 500K and 2 million. We probably most of our portfolio companies are B2B SaaS, but we've invested in B2C companies. We invested in a hardware company that we won't do a ton of hardware. We like capital efficiency, but our true north is the team. It sounds super cliche because so many people say it, but I think there's a reason why it's cliche, is because you look at some of the most successful VCs out there, and they really over-index on the team, the founders. I, once again, was lucky to learn from people like Brad Feld and David Cohen and other great investors. And that's consistent across the board, is really honing in on the team. And so we call ourselves founder focused. We're certainly founder focused when we're out there looking for investments to make and evaluating teams. And then after we make the investment, we're even more focused on the founders and sort of bringing whatever help we can to the table to help their business succeed.
So when you look at a team, what are you looking for? I used to have a saying, at the early stage, somebody needs to be building it, somebody needs to be selling it. No fair, we're all building it and nobody's selling it. But to dive into that a little bit more deeply, what are you looking for in a team when they come in the door?
Yeah, it's such a variety of factors. And one of the ones is what you mentioned is we certainly look for, if possible, multiple founders. We have invested in sole founders, and we'll continue to invest in sole founders once in a while. We really like multiple founder teams with complementary skill sets. We certainly love it if you have co-founders that, as you mentioned, you have maybe a builder who's a developer, you have someone who's a great salesperson, maybe you have someone who's an operations person. So the complementary skill set is really important. And if they're multiple co-founders, we like that they've worked together for a while, that they have a history together, that they're known quantities to each other. And then, of course, they've had some past success. That's fantastic, whether it's success with their own businesses or somebody else's business. So there's different ways that we evaluate the backgrounds of founders to sort of lead us to that point, hopefully, where we have conviction, where like, this is the team to build this type of product in this type of market. And so you hear about product market fit. We really love founder market fit. We have to have a really high level of conviction that this is just lightning in a bottle. This founder was just meant to do this. And of course, before we get to any of that, there's what I call sort of the category A list of qualities, which are all the prerequisites for us: honesty, integrity, great follow-up, great communication, high degree of professionalism. All of those certainly we look for first. And then the category B includes some of the things I already mentioned. The other thing we really look for is a really healthy obsession for solving the problem that they're trying to solve. Passion is great. We all have passion for different things, but I believe that obsession is really going to get you through those hard times, get you through dealing with the downs and not just riding the ups of startup life. And so a healthy obsession that's channeled in the right way, we found is really instrumental, because you look at any great startup success over the years, they usually pivoted a few times. And the moment of pivot is typically sort of the moment of, are we going to fail or are we going to keep plugging away? And so we want to invest in those teams that have that obsession inside them that's going to drive them through those really tough times.
So what are some examples of startups that fit that thesis, especially around the founder market fit? Are there any of your portfolios you think really stand out in that direction?
I love to use the case of our investment in Dwolla. So Dwolla they're a fintech company located in Des Moines, Iowa. And one of the reasons I love using this is because I actually knew them years before I invested in them. I knew their CEO, Ben. And so we had a prior relationship. And I also knew that one of the things I really loved about Dwolla's backstory and how Ben got his start is he had like no experience in the financial services sector. He was an outsider to fintech. He had experienced a problem, which was his previous startup was a custom speaker company. And he hated the fact that when his customers pay with credit card, he would have to pay this 3% fee, which really added up as his company became successful. And he decided to fix it with his next company and build their own payment network. And so, first of all, I love that he was an outsider. So someone founder market fit. Sometimes founder market fit is just having the right level of ability to learn and obsession with solving the problem in a particular market. And he certainly had that. But they went through their own ups and downs and they did a pivot. And they've been around now for, well, I know it's been over 8 years. And now they're doing tremendously well. And they're an ACH platform. And basically their mantra is, they're the API that moves money. And they've just done a fantastic job sort of pivoting, refocusing. They're a great Midwestern company. And I was so happy to circle around with Ben at the right time and be able to become an investor in them.
Well, they certainly are a great product. I've used it, and it's really a slick tool. So hats off to those guys for putting together a great product and a great company. As you see these companies build their startup in the Midwest, what are the challenges they face that you see they may not face elsewhere? Or what are the challenges Midwest companies are facing now?
I think some of it could be community. And the reason why I say that is versus, let's say, Boston, New York, San Francisco, Chicago, I would say those communities are a lot more dense. They're all in one city. Everyone is more or less a stone's throw away. The Midwest is fairly spread out. And so as a region, it's incredibly strong, but the folks you need to talk to aren't always necessarily in your city. And so I think that's one challenge, just sort of geographic nature of it. And then the different sources of capital, it's getting better in that we have more seed funds, more Series A funds. But if you want to continue to raise Series A, Series B, Series C, you're generally going to have to go to the coast. So again, it's a situation where you're going to have to start and build relationships with coastal investors if you really want to continue to raise subsequent rounds. And I think that'll get better in the Midwest. But today, you can certainly get started. You can raise an angel round, a seed round, maybe a Series A. But again, it becomes more and more difficult after that point.
So on the investor side, what are the risks you see investors trying to mitigate when they invest in Midwest companies? What's the challenge on the investor side that you see there?
Yeah, I think it's being present in these communities, being physically present. At Firebrand, we're on airplanes a lot for that reason. We really want to have a physical presence in these cities because there's no substitute for that. And so I'd say that's probably one of the biggest challenges is just each community has its own culture, its own idiosyncrasies, its own key people that you need to engage with and stay engaged with and build relationships with. And so you're talking about not just the obvious ones in our territory, which are Boulder, Austin, Chicago, but also Minneapolis, Detroit, Cincinnati, Columbus, Indianapolis, even a little bit to the east, Pittsburgh, some interesting things going on in Omaha/Lincoln. So making the time and carving out the time to be present to those communities, I think is super important. But I think once you do, it becomes a lot easier. People are extremely welcoming in the Midwest in general, which is something I just really love about it. People are very genuine. And so once you make it known that you're serious about staying engaged with these communities, it can be a great thing.
You cover the entire Midwest, and there's a lot of communities in that area, and people have heard about many of them: Austin, Kansas City, Denver, Minneapolis. Those are well known. What are the up-and-comers, say the next 3 that are coming up that you think they're coming up and will be on the same level as Kansas City, Austin, and Denver in the next couple of years? They may be sleepers right now, but which are the up-and-comers that we should all be looking for?
I think actually Cincinnati has a lot of similarities to Kansas City. In fact, Cincinnati has some things that no other communities have in the greater Midwest. One example is this great organization they have there called Centrifuge, which is sort of a combination startup hub, amazing network of founders and investors and mentors, and also a fund of funds. So it has a lot going for it. Columbus has obviously done a fantastic job and continues to. Indianapolis is high up on our list, and we need to get there. And there's also some really other interesting ones. I've heard great things about Fargo, for example. And so Oklahoma City is really interesting. Dallas has become really interesting. Houston. And certainly in Tennessee, you have Nashville. Health tech is really big there. But then you also have interesting places like Chattanooga. Memphis is up and coming for sure. Birmingham, Alabama it punches above its weight class. One great source in our network are the folks at Rise of the Rest. And they've done a phenomenal job with their tours, sort of uncovering these hidden gems, many of which are sort of in the greater Midwest area. and sort of opened our eyes as well to these sort of up and coming communities.
Well, that's great. That's also a lot of travel, a lot of ground to cover. So it must keep you pretty busy there. So in the last few minutes we have here today, what else should we cover that we haven't?
The only thing I was going to mention was I got a lot of help when I was just starting out as a VC, continue to tap into my network for help, for advice, for guidance. And I always offer it out there that if there's anybody out there who's raising a fund or thinking about raising their first fund, always happy to relay my experiences and sort of pay it forward. I'm a big believer in give first. So certainly, I always offer it to anybody that's raising a first fund. I'm always happy to meet with them, chat with them, and just sort of, again, just tell them how, what it was like for me and what were some of the challenges that I faced, some of the things that ended up working so far for us. And however I can help, I love to do that.
Well, that's great. Appreciate the offer. And how best for listeners to get back in touch with you?
Yeah, they can either connect with me on Twitter at John Fein, JOHNFEIN, or they can just shoot me an email. I'm john@firebrandvc.com.
Appreciate your taking time to talk today. Hope to have you back very soon for a follow-up to see how things are going in your area. And want to appreciate your taking time for sharing your experience with others.
Thanks, Holly. I appreciate it. Really enjoyed it. Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.